Hello, everyone. Welcome to another webinar by Smartkarma. I'm Michael Tegos. Today, I'm very happy to welcome back to the webinar Pranav Bhavsar and Nitin Mangal, who will discuss their non-consensus view on IndiaMart. This is a well-known stock, but forensic accounting and investigative due diligence from our insight providers suggests that risks are grossly underappreciated. And you will be able to hear more about that in just a moment. Nitin Mangal is a SEBI-registered research analyst with more than 10 years of experience in Indian equities and a pioneer of corporate governance and accounting research in the Indian market. Pranav Bhavsar focuses on research on consumer themes and companies operating in India or global companies that have significant exposure to India or the Indian economy. Nitin and Pranav together form the India Independent Insight Team, offering forensic accounting, due diligence, and channel monitoring on Indian companies and themes. And with that, we can get right into it. Nitin, Pranav, thank you for being with us today. Welcome to the webinar. I guess, Nitin, you have the floor.
Thanks, Michael, for the opportunity. Hi, everyone. India Independent Insight, the III is a joint collaboration between me and Pranav Bhavsar. We both are registered with SEBI. So before moving to the presentation, I just want to give some disclosures which are regulatory in nature, that we don't recommend any buy or sell or hold recommendation for the subject company we are going to discuss in this presentation. We do not hold any position in the stock, either by us or any of our associate. We are not forming any opinion on the management of the company. And we are hereby discussing the business of the IndiaMart based on the publicly available information, with an objective to highlight our research capabilities and what are the key risks associated with the business. So, why III and what is the approach we follow when we look at the company? So most of the company, they play hide and seek role. And so why play hide and seek? So market cap is a preferred promoter currency nowadays. So in the 10 years back, when most of the promoters, they used to siphon out funds and showing the lower sales or lower profitability and evading taxes. But now the things have changed a lot. Now they feel that the market cap can make them more richer compared to the other earlier one. They always try to paint a picture which shows that there's a huge potential in the company, and they try to convince the investor that you can buy at any price. They try to provide the earning consistency, and if the revenue falls, they try to build up the narrative around the free cash flows, EPS, and all other things. So we have done a couple of reports on IndiaMart, the flagship report in the III. What we have not understood while analyzing the company is that what kind of growth potential they have, whether they can grow with a similar pace what they have demonstrated pre-IPO or just within the next 1 or 2 years of the IPO. The ARPU number what company says, and given the narrative given by the management in the various conference call, whether it reconciles with the number reported in the balance sheet or not. How the supplier verification and activity level works around. What is the verification process? How the trust seal has been generated? Is there any accounting concern whereby they are trying to dodge the revenue slowdown? What do you feel? What we think about the employees? So we have done some analytics on the employee. What is the profiles and all those things? We have raised some concern about the inefficiency of the management when it comes to the outsourced employee cost. So how much it is justifiable? That these remain the question. So when we were looking at the data and for the GST, which is presented in the Indian budget document of 2018, so the for IndiaMart, the key area to play is B2B segment, especially in the SME segment. And if you look at the GST collection in the SME segment for the B2B is around only 3 to 3.8% of the total volume, which shows or which indicates that the potential for the company to grow in next 5 to 6 years is quite grim. And most of the business in B2B segment generates via large companies or the medium enterprises. So the SME is not the way, is not the area whereby they can see a huge growth potential. And that is what we have witnessed in last couple of years. The company has not been able to demonstrate a good growth numbers. Then what we did is we tried to dissect the ARPU into three categories, which has been guided by the management in various conference call, that the top 10 customers, top 10% of the customer contribute 40% of the revenue. Then the one third of the subscribers are monthly paying subscribers, and remaining subscribers are the gold or silver subscriber who takes the annual package. When we try to calculate the number, then it shows that in one or two category, the number is much below than the subscription price being offered to the subscribers. Now, this can happen only in one scenario whereby you're offering huge discount to the subscriber. But when it has been asked to the management in various conference call, then they never said that they're offering a huge discount to the subscribers. First thing. Second thing, and again the commentary given by the management in the various conference call, again, they flip on what they say earlier. So the CFO of the company has categorically said that when the price hike what they have taken earlier in the year 2019-20, they say that it is going to be applicable for all the subscribers. But in 21, the chairman of the company has stated that the price hike was applicable only to the new subscribers, not to the old subscribers. Now we do not understand why the company has changed its stance and changed the commentary about the hike in price for the subscribers and what kind of pricing they're offering to subscribers. It again raises doubt whether they are trying to match the ARPU numbers, or they are trying to justify why the ARPU has declined or ARPU has grown. So this is what we call is ARPU mirage. We see that it doesn't reconcile with the number given by the company. Now, the third important point is that the company always says that they have n number of storefronts, and it has been a key indicator used by most of the investors to see the how much growth potential company have. Then we did a lot of ground research on that, and Pranav, my colleague and my partner, he has done more than 140 checks through various means, and then we foresee that these supply storefront is not number is not trustworthy, and you cannot arrive at the conclusion that this is a future growth potential of the company. I guess Pranav will throw more light on this.
Yeah, thank you, Nitin, to hand over the floor. So, hello everyone. Just to run you through what we typically do in Triple I is we combine the accounting analysis that we do along with the primary research or the business checks to understand whether there is indeed a growth potential as promised by in a lot of various forums. So, for IndiaMart, what really was a concern or what really strikes us is that in terms of supplier verification, we have found numerous instances wherein the stated supplier is supplying something else only. And the case in point, let's say Arisec Partners is a very well-known, respected institutional investor. And it is very interesting that Arisec Partners is also listed on IndiaMart as a verified supplier, supplying the Arisec Global Consumer Emerging Markets Fund. So the second instance where we found is that another marquee investor, Malabar Investments, also listed on the platform selling motor insurance policy as well as an insurance agent. And what we have done is that we have also reconciled with the GST information, which you can verify on the GST portal. So all these profiles have been verified by GST, and they have a verified supplier tick mark. Similarly, for a company called Dabur, again a very well-known company, it was very surprising for us that Dabur India also offers biscuits. And what we did is that we also called the numbers that were stated on the profile. And in case of Dabur, what we found that this particular profile was traced back to a plant manager in Assam, who usually had once casually used IndiaMart for one of his sourcing requirements. So, and again, we have done almost so many checks wherein, we found that Bajaj Finance, a very well respected company, is selling water jars. We found Bharti Infratel, service provider of housekeeping services. And all these checks are not done using any data mining techniques. They have not been done using any scraping techniques, nothing. We just thought, okay, if IndiaMart is such an interesting big platform, let's see what the top 100 companies in India are doing on IndiaMart, which is why you see a lot of these large cap names on this list here. And we also called the number stated on this particular profile, trying to understand how this has happened. A lot of times we got this response that the profile was not created by us. Some of them were actually some employees looking for their suppliers, and now they have termed them as storefronts on the platform. A couple of companies were also pretty surprised. We also wrote emails to their legal and investor relations department asking that is this profile created by your company, and they said that no, it is not created by them, and they were quite concerned about it legally. So the point which we are trying to make here is that just by random manual checks, we were able to find a lot of storefronts which were not actually real storefronts, at least not the ones that we are aware of. Like we are not aware of Maruti Suzuki providing alarm maintenance services. So which raises a question that the storefront number which has been reported is actually a irrelevant metric to track when it comes to the business potential of this particular company. The another important thing which we found, which tells something about the IT processes of the company. Now, in order to get this trust seal, according to our knowledge and our understanding, the company or the supplier who wants to have a trust seal associated with their profile, they have to pay IndiaMart certain charges, or I think it's included in some of the packages. Now, during this report, I think it was around last year, we found the trust seal for one company. Again, this was all via manual search, no data mining, nothing. The trust seal was supposed to start at 31st December 2022, and expiry date is around 2024. So how is it possible that the trust seal is going to start in the future date? Also, in one of the other instances which we found that the mobile number or the email for this particular company for which the trust seal is not generated was not mentioned. So we think that the supplier storefront is not a credible enough metric to track the progress of the company in terms of the number of storefronts. And also we feel that the trust seal, as in the tools, IT tools used to generate the trust seal itself, can be a little bit confusing when you have instances where the trust seal is going to start in the future. So yeah, based on very simple manual checks, calling 150 suppliers, we found that the storefronts and the trust seal, the technology used is not an important metric to track the growth potential of the company. We go back to accounting. I think I'll hand over to Nitin.
Yeah, thanks, Pranav. So again, going back to the accounting, so when we try to dissect the numbers again and looking at the numbers, so we have predicted initially that there's a slowdown going to come in the company. And we were quite surprised when we look at the few disclosures given in the financial statement of the company. So the deferred revenue, they have two components, the current portion of the deferred revenue and the non-current portion of the deferred revenue. Current portion of the deferred revenue by its definition means that these revenue is going to incur in next 12 months by any standard, accounting standard or accounting guidelines is concerned. Now, if I look at whether these current portion of deferred revenue is being recognized immediately in the year or not. So from 17 to 20, if we look at, for 17, 18, there is no deviation as such. But in 19 and 20, there's a deviation of more than 5%. In fact, in the 20, it was deviation of around 14%, which is quite high. So what kind of accounting company is using? Is it a prudent accounting policy? What we want to argue here? And what happened to these deferred revenue component? Why there's a lower amount of revenue has been recognized? Is there any other moratorium period has been offered to these customers, or few of the non-current subscriber has been booked under the current one, which they wrongly classified as a current one? So these all creates a doubt. Is it just to showcase? It may be to showcase a higher revenue growth or higher ARPU growth, but we are not sure about that. But the accounting policy doesn't gel well, and it doesn't look like a prudent accounting policy. Then the highest cost for the company is the employee cost and the outsourced employee cost. When we try to visit various websites and do analysis based on the information available there, like we did Indeed.co.in, Glassdoor, LinkedIn, it looks like that most of the web company employees, they are the graduates. They do not come from a prominent B school or some IITs or IIM of the world. They are mostly graduates, and if I look at the kind of salaries they are drawing in, it is around it is in the range of 2 to 6 lakh rupees, not more than that. And for the Glassdoor, yeah, for the product development, the salary looks higher. But if I look at the sales and the customer service, there again salary levels looks between the range of 3 to 4 lakh rupees. On the contrary, if I look at the employee benefit expenses, and if I try to calculate the average salary given to the employee, is really high. So is it the higher incentive has been given to these employees? Again, if you look at the trend of the Provident Fund, contribution of IndiaMart in the Provident Fund, it has gone on declining trend. Now, if your employees base is growing, then why your contribution to Provident Fund has gone down? Ideally, what happens that if somebody is drawing a salary of less than 20,000 rupees per month, then you have to deduct the PF from his salary and deposit to the government. If somebody is drawing more than 20,000, then there is no need. But if we look at this analysis based on Indeed and Glassdoor.com, it looks like that most of the employees are in the range of 15,000 to 25,000, 30,000, whereby the basic salary must be lower than 20,000 rupees. So why the PF contribution of the company has gone down? Now, the second largest component is again the outsourced employee cost. So the outsourced employee cost is around 6 lakh rupees per annum. When we try to recheck these costs with few of the service providers, few of them are already present, or we have taken the number from the portal of IndiaMart itself. And when we spoke to them and asked for the quotation from them, they have given a quote of around 4 to 5 lakh rupees per annum. And we have only asked for 30 to 40 or 50 employees, because and when IndiaMart is hiring employees, they are having a base of more than 1,200 employees. They must be getting a better deals. So why there's a huge salary is being paid to these outsourced sales employees? Is it inefficiency of the management? How much is justifiable? It again remains a question mark on the front of the company. There's another interesting aspect on that. So on the various conference call company, there's a small line item that says a checks in hand, which appears in most of the balance sheet of the company, even in all quarterly balance sheet of the company. Ideally, yeah. So on the last date, if you collect payment from the customer, then it must be lying as a checks in hand. So that's perfectly fine. There's no issue in that. But when the pandemic came in March 2020, and it has been categorically said by the management that none of our sales employee has visited a customer's office for 6 months. Despite that, there was checks in hand amount appearing in the books of the company. It gives a doubt why would customer will give you a check in advance more than 6 months. So it becomes doubtful, because ideally they can be checked 1 month advance or 2 months advance, but nobody will give you check 6 months in advance. So again, it raises a concern how the things are being disclosed in the financial statement of the company. These are the broad one. We are in the process of doing analysis on the few various acquisitions done by the company. Yeah, but still not finalized those things. So we are not covering as of now in the report. So yeah, these are the few broad highlights what we can make out of few of the reports.
Thank you very much for that, Nitin and Pranav. As Nitin just mentioned, if you have any questions for the speakers, you can send in your questions through the Q&A button. There is a question from the audience saying EPFO data doesn't include casual and temporary work. Isn't that the explanation as they try to make employee costs variable? So I guess, Nitin, you were about to answer this.
Yeah. So these are not the employees who are casual workers or contract workers. So I'm talking about the absolute number of employees who are on the payrolls of the company. So the question of the EPFO going down is not justifiable from their ends.
Understood. Yeah, there have been already a few questions which Nitin, you have answered in writing, specifically a question addressing the fake suppliers issue, which, as you said, it's not an issue if the suppliers are not verified, but in this case, they seem to be verified by the company, which is what creates some doubts. Another question is, have you looked at the practice of other similar companies in India and elsewhere? And do you think that IndiaMart practices deviate substantially to make financials look better?
I would not like to compare any other company with IndiaMart. There is no peer as such in India. So I won't be able to answer that. On the EPFO, your query is that it has gone down. You are talking about 22. Here I'm talking about 2019 and 20. So I guess that is where you're getting confused. So the EPFO number, if you look at for 19 and 20, then you'll get the exact answer, and whereby the number of employees has gone up.
Okay, thank you for that. Another question is, can you comment on the acquisitive nature of IndiaMart? It seems to be making a lot of small acquisitions in the recent past.
Actually, we haven't completed our analysis on the acquisition as of now. So it would be too early for me to comment on that. So once we'll be finishing up our analysis on that, then we'll be able to answer that, or we'll be releasing a note on that.
That sounds good. And of course, all attendees can reach out to us either through our email address, research@smartkarma.com, or we can get in touch with you directly to share more information in this regard. Another question is, are you doing any revenue recognition checks? Companies do take credit for revenues received, but pertaining to future periods, is revenue recognized from opening balance disclosed by management or estimated?
Revenue recognized, the opening balance is not estimated. It is the actual figure. It cannot be estimated figure. First thing. The revenue check we have not done as such, but these things is pretty much appear or visible from while analyzing the financial statements. So there are two ways of looking at the revenue. One, you try to dissect the ARPU, so how the ARPU is behaving, and the second thing, how the deferred revenue component is moving in the balance sheet of the company. And that is why, so the entire thing, the hypothesis for this report is what is the future growth potential of the company. And we foresee that the future growth aspect is not too strong. And that is why the company might be doing a lot of acquisition. On the quality of that, we can't comment as of now, but that is where, they're desperate and they want to grow faster to show the similar kind of growth. Yeah, this is from the Rahul has asked this question. And I would agree that this pandemic has acted as a catalyst for most of the internet-based company and the platform businesses. Despite that, the company like IndiaMart has shown a degrowth in the revenue or the slowdown in the revenue. So not the revenue, I'll say it's a subscription base. So that's again a cause of concern that this is a lifetime opportunity for the business like the IndiaMart is doing. And despite that, they were not able to show tremendous growth.
Yes, that was for a question asking why is growth slowing down for IndiaMart when it might have been growing during the pandemic. Another question is, have you seen any suppliers with related party angles or any other transactions with related parties that are concerning?
We cannot say that because the supplier storefront, what has been created on the company, it may be some related party, but we don't know whether the company has received subscription fees from them or not. So we can't comment on this related party angle on that. But from the financial statement, it doesn't look like that there are any related party dealing with the suppliers as such. Barring only one small one, I guess it's a ProcMart, whereby the company has given some advances, and that amount is quite small in overall scheme of things.
Mhm. The question is, apart from network effects, is there any other major moats in the case of a platform-based company like IndiaMart?
Till the time company is not providing other services, which is the X factor for the suppliers, like they are always trying to create or expand their pay with IndiaMart business and provide some ancillary services to the clients. It won't look like that very remote if they'll be providing a holistic services or backward integration like logistics and all those things. Then it may appear that there can be a moat in the business.
Thank you for that. Deviation from opening balance of the current portion of deferred revenue and revenue recognized from opening balance. Could this be due to premature contract cancellations? As the question.
It may be, but if there's a premature cancellation of the contract, then it should be disclosed separately, not as amount recognized from the opening balance. And that is specifically written in the financial statement that this amount of the revenue recognized only from the opening balance of the current deferred revenue, not from the non-current deferred revenue.
Understood. Another question is, so I'll just read the question verbatim.
Sure.
Isn't Westbridge investing in Viapar at much higher valuation justifying the business acumen of investing by IndiaMart?
Westbridge is an investment manager and IndiaMart is not an investment manager. So IndiaMart is a company, I know it might be investing into these ventures for the operating benefits, not for the investment benefit. If they are behaving like a private equity fund, then you can say that, but I won't see IndiaMart as a private equity fund.
And attendee asks, have you asked IndiaMart management on clarifications on your queries? And if so, what was their reply?
No, we do have a standard practice. We do not interact with the management prior or post release of our report. Whatever information or analysis is being done, it's always done on the basis of the publicly available information. And we don't deal into the private information, which is not known to the market. So we don't foresee that we don't have the practice whereby we contact the management for the clarification.
Thank you for that. On ARPU, is the concern largely that there are segments of customers which have lower than disclosed subscription price? The attendee says they missed the explanation.
Yeah, so see, if you dissect the ARPU into three buckets, one bucket is the top 10% of the subscriber contribute 40% of the revenue. 1/3 of the subscriber are monthly paying subscriber, and others are paying annually, maybe gold or silver subscribers. If I try to dissect the ARPU and calculate the number, then for one of the category, the ARPU comes below the subscription price being offered under these categories. It can only happen if company is offering a huge discount to the subscriber. Otherwise, it cannot go below that.
Understood. Thank you very much. That's just about all the time that we have today. So thank you very much, gentlemen, for sharing your insights. And thank you, everyone, for asking your questions. I would like to remind everyone that you can reach out to India Independent Insight directly. So if you wish to do that, please contact your Smartkarma account manager or email us at research@smartkarma.com, and we will make sure to put you in touch with them. And I would recommend following Nitin and Pranav's profiles on Smartkarma so you can see every new insight that they publish on the Indian market. With that, thank you very much, gentlemen, once again.
Thanks, Michael.
Thank you, Michael. Thank you, everyone, for attending.
Thanks,
Bye.
everyone.